Welcome back to IR in Focus, the show where we dive into the latest trends and strategies shaping investor relations today. I'm your host, Carmen Lilly, and in the next 20 minutes, we'll be diving into investor engagement, communication strategies, and managing through change. With me on this discussion is Michaella Gallina. Welcome, Michaella.
Thanks, Carmen. I'm so happy to be here today.
I am so happy to have you here as our special guest. Before we go much further into our discussion, I'd love for you to introduce yourself to our listeners. You have such a robust and varied background that I think lends a lot of weight to your reputation, as well as offering a really unique perspective.
Thank you. We live in a world today where you don't have to take one track to get, to any certain career path, which is one of the things I love about investor relations. And I think having a broad skill set and experience actually pretends to being a better professional in that sense. And so in my case, I started my career in investment banking. I was a sell-side M&A banker. Then I went to the buy side for a large growth company doing stock picking and research for consumer and technology stocks. And then over the last 11 years, I've run investor relations and corporate finance functions across 4 different public companies from consumer to medtech. So I've had a lot of experiences. And I think, investor relations professionals who have been through a lot, such as activist investors, deteriorating business conditions, major acquisitions, et cetera, really do learn a lot more about the landscape and how to be a stronger professional in that sense. So I've been so grateful to have all of the experiences that I've had. And that culminated with my prior role, which was running investor relations for H&R Block and also being the chief financial officer for Wave, which was a fintech owned by H&R Block. And I really think, having those diverse experiences help you be just a general better professional, whether you choose to stay in IR or leverage that experience more broadly.
I couldn't agree more with you. Just thinking about investor relations itself with the different hats an IR professional has to wear, get so much experience, I guess, across the organization. And then in your case, you have, it seems like a very rounded experience because you're on all in the different areas at play within the capital markets ecosystem. And I'm just echoing your point there that yes, I think it's absolutely important to have such great wealth of and varied background there. But thinking specifically about your IR experience, so let's start there. And thinking about how you manage market expectations. I'm thinking specifically around earnings calls, but feel free to answer more broadly. So what's your advice on creating a story, managing expectations, and communicating a company's performance?
Thanks for that question. I think, personally, my philosophy really boils down in any of these topics that you just talked about, whether it's an earnings call or an analyst day or any other part of the IR function, is that you really need to communicate it in really 2 buckets. 1, things you can control, and 2, things you can't control. So things you can't control, for example, would be what happens in the stock market, foreign conflict, what regulatory changes might happen, and things like that. But as a company, and especially as you package your message, if you can operate within the framework of what that company can control or execute against, I think you can build a more credible story. One way that I like to do this, that I think is a great way to provide a framework for investors, is to kind of use the blueprint of what is your total shareholder return algorithm. One thing that really surprised me when I came over from the buy side, from being a stock picker to coming over to the other side of the table, was that the lens through which financial analysis and theses on companies are built is very different on the analyst side compared to the corporate side. And what I mean by that is, it kind of had this classical analyst training from being in investment banking and working on the buy side. And you learn from that lens what analysts are really trying to get at. So for example, they might ask a line of questioning to a management team that answers, but if you've been an analyst, you really understand what they're trying to get at. For example, how they're really trying to model a line of business or a gross margin. And it's really interesting how from the corporate perspective, you drive strategy from a different lens. And so I think the goal of the investor relations professional is to bridge that gap a bit. So going back to this total shareholder return algorithm, I think is one way where you can really help do that. And so basically what that looks like is providing the boundaries of the financial model on an annual basis to the analyst in story form. For example, when I was at H&R Block previously, I used this framework of here's our revenue growth of growing, for example, at the time it was 3 to 6%. Then EBITDA grows even faster than revenue. We set up to 1.5 times revenue. And then you layer on share repurchase and you get to about double-digit EPS growth plus a dividend. So what that does is it packages your entire P&L story, how analysts should be modeling your story, in a really simple framework to operate within. And then we broke it down even further and we said, for example, within revenue growth of 3 to 6%, here are all the levers we have to achieve that. And by providing a range, you give the analyst flexibility to say, okay, well, if this cylinder doesn't fire, that's okay. They can still get within the range. And so speaking in their language, along with providing that range and in great detail of how you're going to achieve that plan, gives you a ton of credibility. And it also gives you the wiggle room to operate the business as things come up, right? The what can you not control that might come up. So I think that's a really good framework. If you can operate within that annually to provide guidance, you can demonstrate your confidence not only in the long-term story, but the near-term nuances. So I think that's a really helpful way to do it. Obviously, it differs from company to company, but if you can really get analysts focused on that bigger picture perspective in the language that they communicate in, they'll have more confidence and you can win more support from the investment community overall.
I really like that messaging and how you kind of think about and frame up what you can control and really what you can control. And I really also liked your point around kind of creating a boundary around your financials and then creating that in story form, but still at the end of the day, talking the talk that, the investors or whatever community that you're talking to is expecting. So if you're talking to analysts, like really understanding what is at play in their models, right? And this kind of harkens back to my most recent podcast. I had Melissa Otto from Visible Alpha on my podcast. And one of the main pieces of advice that she gave IRO professionals was really digging in and understanding the analyst models. And I like that how you also hit on that as a way that you found success as well.
It's a really, really important topic in our business. And I think a lot of that is because many IR professionals are given advancement because they're high performers in the company, but they might come from different areas like corporate communications. And so there tends to be at times in certain roles, a gap of really understanding that analyst basis. And so I say this all the time to my peers. Acquiring that skill set can help you get so much further in the investor relations profession. And it makes you such a better communicator to those analysts that I think it's a skill you have to acquire, whether your company supports you to take, for example, Wall Street prep or training the street classes, or just you yourself going out on, some of the free educational resources to familiarize yourself. And honestly, getting feedback from the analysts that you're talking to better understand their framework so that two-way communication is clear, and more helpful between both parties.
Absolutely. Switching gears just a little bit. You're out there, you're communicating, you're creating stories to investors, you're talking to analysts, but thinking about the back end of that loop with investor feedback. So how do you gather feedback from investors? And how does that feedback influence your communication strategy?
I think feedback is one of the important muscles you can have, whether it's personally or professionally. And it is absolutely critical to being able to provide a message to the street that addresses all the pros and cons so that they can really believe in your story. Whether you're an IRO in a new position or if you've been at a company for a long time, you should constantly be seeking this feedback from all stakeholders, by the way, your sell-siders, your buy-siders, your board of directors, and really facilitating all of that feedback to make sure your story can encompass and span the spectrum of all of those perspectives. When I think about it, one thing I do is I try to end every investor call by putting a question back on them. So I'll say, from what you heard today, how are you feeling about the story? Or, what keeps you up at night? And I also ask, what are you hearing in what I call the hedge fund mafia out there? Because all of these analysts are talking to each other. The short guys are talking to their friends who are long, trying to improve their theses, or they're saying, hey, I heard this. What have you heard? And that's a perspective that you don't get if you're only talking to analysts who are calling that are interested in your story. So you really need to seek that feedback from a completely 360-degree view. The analysts call me too, and then they call a sell-sider. And the sell-siders are really, they have a megaphone for your story. They can amplify your story if they believe in it. So those buy-siders call me, and then they call a sell-sider and they say, hey, I just want to gut check this, or did you hear the same thing? And that sell-sider can really help you with the story. But then you need to go to the sell-siders and say, hey, what have you been hearing? Because the conversations you get from an investor relations perspective are kind of filtered from the buy side, but they'll typically give a broader or bigger opinion to the sell sider who can reflect that back to you to ensure that you're addressing these topics that might not otherwise come up. Or, if there's a certain topic that analysts really aren't buying your story on, you can take that feedback back to the company and build a better strategy. So it's a really important symbiotic relationship to ensure you're getting feedback all the way around. That's also a really important piece to take back to your management team, which I think the IRO truly has a duty to ensure the feedback they're getting from the street is incorporated to management so that you can take that feedback and really create a better strategy internally and make sure what the company is doing is completely related to what what analysts are seeking. And that's, I think at times you have to raise your hand and you really have to go to management in the right way with the right behaviors and say, for example, the street isn't buying our story on this, or they have concerns about this other piece. What can we do about it internally? And your product people or your strategy people or your GMs should be aware of that so that they can help do things on their end to build better bridges across the two communities, the corporate community and the investment community. So I think it's really important to tailor your outreach then at the same time, going back to the other side of who are you talking to, what's their type of strategy, and how can you tailor your outreach and your pitch to them in the way that makes the most sense. So feedback is this continuous loop, really across the triangle of the investment community, the company, the liaisons, the buy side, the sell side, constantly. And that will only strengthen your message to ensure you're incorporating all the voices and can answer all of the questions, in all of these different venues that are happening.
Absolutely. Yeah. And I like your thesis on having it be a feedback triangle, but as well as to me, you're kind of painting a story of kind of a little bit more like an octopus, right? You kind of have like your legs everywhere, right? And then getting that feedback. But you also touched on an interesting point here that maybe we can expand upon. So thinking about, so once you've gotten that feedback and then managing up, whether it be a tough topic or good feedback, you should be filtering that back up with management. Can you expand on that a little bit? I imagine that it really kind of leverages a lot of soft skills and that soft skill muscle there. But how do you manage those tough topics when it comes to, presenting that back to management?
It's what I would say a fiduciary duty to do that in your role as an IRO. If you start on the most basic level, the IRO is in the weeds talking to investors every single day. The rest of your management team is conducting business internally, and they're not hearing the feedback that you're hearing. They're not hearing what questions are being asked most. They're not hearing the new topics that all of a sudden are bubbling up that you haven't talked about in the last couple of quarters that, analysts might be bringing up. Frankly, management is just not as close to the investment community because that's the role of the IRO and they have to run the business. So, when I develop a Q&A for earnings, for example, I can be really confident in that Q&A because I've done, call it 150 calls with investors over the prior quarter. I've heard all the questions. I've been able to hear the questions from different perspectives and better evolve my answer over time to what I think investors are looking for or, want to hear more about. But when your management team gets that Q&A for earnings, it's the first time they're taking a look at it. And so you really have to remember from that lens when you're preparing them that you have the credibility because you've been having all these conversations. And so hopefully, if you're really doing best practices, you should be providing that feedback loop along the way regularly throughout the quarter so that they're not surprised by the Q&A. So it's important to kind of bring your management team along with the trends and changes in the conversations you're having with investors. So it's not just a one-time event. And that will then help them be better about, oh, Michaela mentioned that this topic came up last week, and she hasn't heard it in a few quarters. And so then when he or she is in a meeting with that team, they can say, what are we doing about that? Or, you know what, we need to be doing more here. And it can really create a better relationship to improve the function. But again, the IRO is really on an island from a corporate perspective, because you're the one that has this very different carved off role of external communications when everyone else is focused internally. So again, it's really important. I think regular communication with your management team, open communication and transparency, and beyond the management team. I think IROs should have really good relationships with, government affairs, with comms, with product lines, with strategy, because all of those people really need to inform what's going on at the company that the IRO is packaging, and vice versa. So having strong relationships internally and having regular communication about what you're hearing, again, only makes both sides stronger. And I really think there's really no one else at the company but an IRO that can do that. So it's a very important role.
Yeah, I really like how you framed that up for us. Thank you. And then thinking about how you are, you're bringing along management for the ride, no surprises, right? You're making sure that they're hearing the critical pieces of feedback that you're hearing on the ground. But then thinking about, so that again, you have a lot of plates in the air in terms of juggling all of this communication. So how do you ensure you're communicating transparently, especially in times where there might be outsized market volatility, or
Mhm.
outside like macroeconomic risk there?
This tailors right into what we were just talking about, where the IRO has a real responsibility to ensure these issues are communicated transparently to the company, and that there's an open line of communication for that, because you can bring up these needs from the investment community, which it obviously is the end result. They're the grader at the end of the day, right? With whether they're buying, holding, or selling shares. And so you must have their opinion. And so being transparent to your management team about what's happening only better evolves what they're going to do and how they're going to handle the situation to better meet those investor needs. And I really think the value of being straightforward and being able to have a trusted relationship to share some of these hard topics back and forth, it just couldn't be more overemphasized in the IRO role. And that goes back in the other direction too, as you're speaking with investors. Transparency is everything. And if an investor views a company as a black box, or they can't trust what's being said, or they're not getting answers, that immediately is a red flag to them. It destroys credibility of the company, and at the far end of the spectrum, makes a company uninvestable. So transparency is just a core commitment of what, all external communication should be based upon. And I really think you've got to walk the walk. If there's a big potential risk in the marketplace, whether it's macro, whether it's company specific, the IRO needs to lead a story internally and externally of hitting that head on, of not walking around it. You don't want to be caught on your back foot. You don't want to ignore the issue and look tone deaf. And the last thing you want to do is try to pretend like everything is rosy when it's not. So being transparent to me means that you acknowledge there is a problem, whatever that might be. Acknowledge there's a risk. And then more importantly, pairing that with what the company is doing about it. So yes, we know what's happening. We see what's happening. And here's XYZ things that we're doing. So it kind of goes back to this message that we started with of what you can't control and what you can control. Yeah, whatever is happening in the world is on fire. We can't control that. But what we can do is all of these things from a company perspective to be stronger, to overcome those, to combat these risks. Because every company in any industry of any size is going to have those at all times. So I think you need to be really transparent about that. And again, it goes back to building relationships and having this, you called it the octopus, like these 20 overlapping Venn diagrams to understand feedback from all parties to ensure that your communications address all of those stakeholders, and do so in a way that you understand exactly the concerns, and you can create a plan internally and become really a strategic thought leader in your organization of all of these issues and how to address them. So Again, transparency is everything. And I think it's not only an external focus, but it really needs to be part of your internal relationships with management so that you can lay everything out on the table and come up with the best, plan of attack to package then back externally.
Yes, and I absolutely love your comment around really acknowledging issues at hand, because to ignore those and really not face those head on, you do look silly. You do look like you may be out of touch or out of loop, or maybe even just, hiding something if you're not just facing that head on. So I really like your point on that and how that builds trust and also transparency with your investors.
It's all to me, I always think like it's all really simple, but executing it can be much more difficult depending on, different personalities, the things you can't control that's happening. But I always think if you can go back to those simple frameworks, that is very often your best guiding light.
So thinking about that and thinking about your communication strategies, let's shift gears just a little bit and talk a little bit more about managing through change. So we talked a little bit about, macroeconomic environment. Think there are things you can and can't control, but there are definitely outsized influencers on how your company performs, right? And there's these large challenges at play now. And I'm going to let you pick path here, whether we go AI
Okay.
or whether we go sustainability.
Okay.
But when we think about industry disruption or increased regulatory rulings around whether that be around sustainability or even around AI and how it's used, but we've also seen with AI has shifted a lot of focus to these really heavy growth and tech companies. So keeping that in mind, those two paths here, we have these challenges. In your opinion, how do you kind of like manage and communicate how your company is handling these challenges it may be facing in the marketplace?
I love this question, and I'll do my best actually to tie in this theme of really simple frameworks, no matter what you're doing, or dealing with, right? Whether it's sustainability or AI. I feel very strongly, again, this is just my personal philosophy. There's a million ways to look at it and to do this, but I think every company needs to take an individual approach. For example, when I think of AI, you don't need to be NVIDIA to have an AI strategy or to drive great growth. What you can do is say, what can't I control? As a company, we don't know where AI is going, but we know it's a trend. So here are the ways we're going to test it or implement it. You don't need to try to be anything that you're not. And that's a really important and simple piece of messaging for any company, again, of any size in any industry. Don't try to be anything that you're not. From a sustainability perspective, take a unique approach based on what your implications for ESG are based on that specific company. So I would say, whether it's AI, whether it's sustainability, look to the demands of your stakeholders, right? They're going to tell you what they care about. And again, they are ultimately grading your company at the end of the day. Look at the regulatory environment, of course, to ensure you're following and preparing appropriately. And then you have to look at your individual business model. From an ESG perspective, what's your purpose or mission statement? Where can you make the greatest impacts? Everyone kind of has to fill out these surveys these days for ESG, and that's important. But what can you really do to make an impact? And what do your shareholders care about? Because if you're ExxonMobil, that is completely different than if you're a consumer packaged goods company. So I really think you have to go back to that individual lens. And same thing from an AI perspective. You don't need to be the company leading the charge. You just need to be a company that tells a credible story and achieves that. And you don't have to be a unicorn. I think it's so interesting in today's market how everybody thinks they need to be this big, sexy, unique story. And the truth of the matter is, you can be a value player. You can be a growth story. You can be a value play. There are tons of different strategies. You can be a yield fund, and you don't necessarily need to be anything different than you are. You just need to present a credible story, put out reasonable expectations and achieve them. Again, sounds so simple, it is way harder, but whether it's any of these topics that we talk about, if you just go back to that lens, I think taking a company specific approach and painting a story of who you are and what you can control typically tends to be the best framework that I've learned. And to go back to what we talked about today, when you do that and then you incorporate feedback and you build great relationships, I mean, that's the gold standard for the investor relations profession. And that is truly how your IRO can drive tremendous value for a company, even if they're not an operator, even if they're not in other finance roles. Their perspective is so unique to the marketplace that they really have this amazing opportunity to drive that communication back to the company to ultimately create value. So I just think it's such a tremendous and exciting role. And there's so much an IRO can do to support both sides of those stakeholders.
Absolutely. I don't know about you, but I feel super motivated coming out of this conversation as well. Maybe you should look into that as a side job, doing the motivational speak. And I'm not even an IRO. I was like, yes, we could do this. This is simple. We could do it.
Oh, thank you. I am so passionate about this profession. I just love it. And, to your point, you can have one IRO, but an IRO there's no limit to what they can do. And I say this every day. I mean, you could have a team of 5 or a team of 20 or a team of 1, and you can always be doing more. And it's really fun to be creative and be able to see the value you're driving come to fruition. And at the same time, I actually think the IRO provides the most value in times of crises, but maybe we'll have to do another podcast to
Yeah,
go through that topic.
absolutely. Well, thank you so much, Michaela. I really appreciate having you on to have this discussion. I think you gave us, myself and our listeners, a lot to think about, especially in how to prioritize transparency and think about investor engagement. So thank you so much, listeners, for tuning in to IR in Focus. If you enjoyed this episode, make sure to subscribe and leave us a review. Stay tuned for more great discussions with leaders across the investor relations landscape. And until next time, I'm Carmen Lilly, and this is IR in Focus.